What are the markets doing? The RBA's decision yesterday, the results from reporting season so far, and some viewer questions around the Switzer Dividend Growth Fund. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Paul, you've been away. The market.
On the job there, Peter.
You're always thinking about money because you're mad about money. What's your view on what you're seeing in the markets right now?
Look, I think we're still in this sort of phase where the market in the US brought it up ahead of Trump. They're now seeing what he's doing. I think they're just in this sort of pausing consolidation phase, Peter. I mean, we always knew it was going to take time, defence spending in infrastructure, all the changes to corporate taxes, deregulation, always going to take time. But I think they're just sort of waiting to actually just pulling it back a bit. I mean, perhaps it just needs some further really positive things to sort of spur it on. And I think we're maybe just in that sort of hiatus.
Well, both you and I thought a pullback was on the cards because the market went up. And I guess it was, but now the Dow's coming back close to all-time high territory. What I like, what I'm seeing is the market doesn't really want to sell off. There's kind of a belief that Trump will get a lot of these policies across the line.
Yeah, I mean, everyone sort of wants the 5 to 10% or 5 to 7% pullback, and of course, everyone was waiting for it and it doesn't happen. Well, the inevitable, it goes the other way. Yeah. So I'm probably in that camp as well, Peter. I mean, I think you've got to say so far the market's giving him pretty good marks. Yeah. He's certainly been quick off the mark. There's been some articles, I think, the Trump trade will take longer, but the market's not really pulling off. So if the earnings results keep up there, I think that's probably the most important thing for the US market and ours, the market will go up.
And so is it important that, say, in the first 100 days, he looks like he has the credibility to get a lot of his policies through Congress? And if that happens, the market will keep going up?
I think you're probably saying it. That's about the way it is. And so, we've just got to sort of give it a little bit of time, but there's no enthusiasm yet to sell it down.
No. But Trump's going to be in the news, Paul, all the time.
Trump's going to be in the news for a little while. We'll get bored with it eventually.
Let's look at the early results so far. Transurban, of course, was yesterday.
Yeah, look, Transurban was good. That's why it's in our income portfolio. I always, it is a growth company, but it's not just an income stock. It has
not expensive, defensive.
It has a monopoly, and it is increasing, new toll roads, and these toll fees keep going up by more than inflation every time. So traffic growth that they got yesterday, that's why the distribution's going up. So I thought it's always been wrong to label Transurban as a defensive. It's not really defensive. It's an annuity style growing company with a growing annuity revenue stream. Look, that wasn't too bad. The NAB result, little on the weak side, but there's only a quarterly report, so for the banks, really got to see what the CBA delivers next Wednesday. Yeah,
and I guess the bottom line is Transurban was a typical good company that lost a bit of market love when there's a rotation into banks and resources post the Trump election. And I guess we're going to see a few companies probably report better than expected, and the market will start loving them again.
Yeah, that's my sense. I don't think there's anything. It's very early days in reporting season. There hasn't been anything too bad, but look, I think the market took a bit of a caning, or gave some of these stocks a bit of a caning, and if they report okay, the market's probably going to say that's not too bad.
Yeah, and I guess the interesting one is BlueScope. It reported well, and a lot of experts like BlueScope, and I think if they like BlueScope, it must be a good sign.
Yeah, look, it must be. I mean, I sold out of BlueScope far too early, as it turned out. But anyhow,
don't blame me. I wouldn't have been in
we all get some wrong occasionally, right?
Yeah, for sure. All right, so the Switzer Dividend Growth Fund.
Just on the RBA yesterday, that was a really bullish statement, I think, from the RBA.
Good point.
Today. Yes. Look, he's on your side, Peter. He's the Switzer view.
Yes,
on
he's
market.
a perma bull like me, apparently.
He's a perma bull, so that should give the market a bit of support today. I think the market's got to say that's a very positive statement from the RBA governor.
And they are the most august economics body in the country. I don't always agree with them, but I think they're a pretty serious and good organisation.
We're getting the bell here.
Okay, the last thing I want to talk to you about is we have a few viewer questions about the Switzer Dividend Growth Fund. Let's just tackle some of them. What's the difference between the exchange traded product, which our fund is, and a LIC, a listed investment company?
The main difference is they're both listed in the stock exchange. Exchange traded product like ours should trade close to the market price all the time. That's because it has a market maker that tries to ensure that the actual where units are changing hand in the stock exchange is actually where the underlying value. The main difference with a listed investment company is it really depends on buyers and sellers. So sometimes listed investment companies can trade at a premium, sometimes they can trade at a discount. So look, and they both use active investment styles, they're both listed, you both get your statements. So it's really a question more around a construct of where the market is trading. Yeah. That's probably the major difference.
But you've always been hesitant to support a LIC if there's a big premium. Explain why.
I like LICs when they're a discount. That is, you're paying something that's cheaper than it's actually worth. I reckon that's a good trade, right? Yeah. I don't like paying more than something's actually worth. Remember, all these companies just own paper. That is paper asset shares. Yeah, okay. Notwithstanding how good the manager may be in the future. So for me, I like buying listed investment companies at a discount. Don't like buying them at a premium.
What's the difference between an exchange traded fund and our exchange traded product?
Yeah, look, I mean, typical definition of exchange traded fund is something that's like a beta shares or iShares. They're passively managed. That is that the manager passively follows whatever the index says. So
ASX 200.
Yep. So it does not think. It's on autopilot, right? That means you're guaranteed to get index return minus a fraction. Guaranteed, right? In this type of fund, it's active management. So our investment team is out there trying to say where they see value, and they're taking biases in the market. That means they could be spectacularly successful, and they'll get better than the market. They could, not do as well as the market because they could get some calls wrong. So we're an actively managed fund, whereas a typical exchange traded fund is passively managed.
But I keep saying, Paul, and correct me if I'm wrong, that with our fund, because we are chasing historically good dividend payers, when the market really has a bad time, we're more likely to at least pay a good kind of dividend, because dividends don't fall as fast as share prices.
Our fund will distribute all the income it receives, so people should be able to factor in a reasonably predictable income level.
Paid quarterly.
So that's a big plus. But like any actively managed fund, it's only as good as the people. That's our team doing it for us, and the input we give them. So if we don't do a good job, well, you won't get a great return.
One final question, and I've been asked this on radio, why buy now rather than after the listing?
Yeah, look, the main reason to buy now is you get set, all right? It's essentially a difference on timing. You can buy today in the IPO, don't pay any brokerage, guaranteed to get it, or you can wait till it comes on market and buy at the market value. The main reason to do it now is, of course, whenever we put things off, we tend not to do them. Okay, we always talk about time in the markets rather than about timing. If you think the market's going to be a few % weaker in a couple of weeks' time, then don't buy in the IPO. Buy then. But the question you've got to make sure you come back to is, will you actually get round to it?
Yeah, good point. So that's Mad About Money. I'm Peter Switzer.
I'm Paul Rickard.
And we are mad about money.